Hey, good afternoon, and welcome to the FX Week Ahead, Look Ahead live market analysis with myself, Giles Cox. And I hope you guys are all doing well. I'm just going to say hello to folks as they're coming in. Hi, Alejandro. Hello, Emily, Ilkon, Mark, Lefemi, Van. Good to have you on board, guys. And if someone could just type in the question panel and just let me know that you can hear me okay, that would be really good. I always feel a sense of reassurance when I know that you guys are hearing me and I'm coming through loud and clear. I think everything seems to be working my end. Don't forget there's a chat panel or the question panel, and that would be ideal just to let me know that I'm coming through loud and clear. I am hoping that no news is good news, that you can hear me okay. So I'm assuming. Yeah, oh, thank you, Mini. That's great. Lovely. You can hear me okay. Right, well, we're going to look ahead this week to see what's really, potentially market moving. We've been in a much more exciting market situation recently with much more volatility, and there's been a lot more movement lately. So that's more helpful for us as FX traders, because when we get that movement, we get more opportunities as a general rule of thumb. So it's a good time for us to be having this FX week ahead. Don't forget that as we're going through different scenarios, different outlooks, different trading situations, this is not a signal service. So I'm not selling signals or giving advice on how to trade. This is all about education, so you can see how do I as a professional trader go about trading the markets. And then as you look at the principles I'm using, the idea is you can repeat those principles for yourself and make your own decisions. And you can just generally start to see, the themes that play themselves out over and over again in the markets, so you can take benefit for yourself. What we're going to do is looking at the FX week ahead. We'll be looking at the main events. And there's a lot to cover as per usual, but we're going to be focusing on the calendar as well to see the specific events that we have. Okay, so as we're starting the week, the Monday, generally speaking on Mondays, what you have is a resetting of the markets. Unless there's something really strong that flows through from last week, a real strong sentiment, kind of Monday morning is a reset mode. And the market's kind of woken up in a much more optimistic mood. So in the Asian session overnight, we had upticks in the Nikkei, the Hang Seng, the Shanghai Composite. The Hang Seng and the Shanghai were both up over 2% each, and the Nikkei was up 0.71%. And so the general theme in the market is in risk on mode. So this is from last week, I haven't changed it, is in risk on mode. So we'll look at that in detail. It's the first learning point. These are the two major kind of market themes you get on a day-to-day basis as markets either on risk off mode or risk on mode. Okay, so when you're on a risk on mode, like we currently are at the moment, what you get a lower volatility index, and you can see here's the volatility index here on the right hand side. A quick snapshot just before I came on this webinar to show you. So these are kind of the characteristics. When you're in a risk on mode, when the market is more optimistic, you have a lower volatility index. So that's 4.11%, and that's just around the 17 handle, and it's playing around a 21 daily moving average that it's just being contained by at present. You got stocks rallying. You can see all that sea of green, all the stocks have been rallying. Asian stocks rallied, and then Europe's open following Asia's lead. Remember, the stock market goes around in this cycle from Asia to Europe to the US, Asia, Europe to the US. And when one indices close, so when Asia closes, the question is, will Europe continue that lead from Asia? So what's happened is Asia's lead has been followed by Europe, and now currently the US is following the lead from Europe. We've got the S&P 500 futures up plus 1.06%, so we're looking at a positive start for the US. Then you get bond prices falling. Now, that's worked out by bond yields rising. So I'll just show you I'll just do a quick screenshot of the yields. So you can see here, these are a quick snapshot of all the yields. So the yields are rising across the board. US yields, European yields, everything is rising. And so this is risk on. And in a risk on environment, what you expect to see is a little test for you guys. What do you expect to see happening to currencies in a risk on environment? Those of you who've been following for a while, what's the characteristics that you expect? I'll give some of you regular guys. Raj, in a risk on environment, you're expecting bond yields to rise, but you're actually expecting the price of bond to fall. Remember, the yield of price and the yield of bonds and the price of bonds are different. They work in different order to one another. So in other words, if bond prices are falling, bond yields will be rising. Okay, so what we're seeing is bond prices are falling and then bond yields are rising. What would we expect to see happening in currency? Raj, I hope that's clear, Raj. You've got to get that in your head. So with the, hang on, let me just show you, with what I've just shown you, with these are rising yields, okay? So at the moment, we're in a risk on environment. We've got lower volatility index, we've got stocks rallying, commodities rising, and we've got bond prices falling. The way that's reported, Raj, is that bond yields are seen as rising, okay? So often a bond, when it's reported with the yield, okay? So these rising yields represent a falling bond price. You'll have to Google it if you're really struggling with this. I've done some.
No, it looks like the State Department is now just confirming, or the Commerce Department rather, just confirming that news we heard from Ross. Huawei been granting a general license extension for another 90 days. Again, that was out earlier. It looks like the.
Okay, here we go. Sorry about that. Okay, is that clear? Yeah, great, good. I'm glad you got it, Raj. Okay. So in a risk-on environment, just to help you guys, what we're expecting to see, Japanese yen strength is on a risk off. But in a risk on, we're seeing Japanese yen weakness, Swiss franc weakness, and they're expecting to see Australian dollar, New Zealand dollar strength. Okay, they're known as the commodity currencies. So generally speaking, that's what we get in a risk on environment. Okay, so at the moment, we're expecting yen pairs to be strengthening, because if you're trading against the yen, we're expecting to see the yen falling, getting weaker, and we're expecting the Antipodean currencies to be stronger, Australian dollar, New Zealand dollar. So that's the market we're in. But the key thing to remember, this has been going against the flow. Last week was a big risk-off week, and so the risk is very sensitive. Okay, so in this kind of environment, we're sensitive to risk, and what we're waiting for some more bad news to come, because it's more likely that there's going to be more bad news this week. And we're going to go back to risk-off, which is yen strength, Swiss franc strength. Okay, and the reason that's more likely is, think of all the risks that we've got in the market. We've got Brexit, we've got political risks out of Italy, we've got US-China trade war. We have a number of significant risks, the general global growth picture. So this is the first, the learning point is this: we're in a risk on mode at the moment, but that risk on mode is sensitive to change. It's very sensitive to change. So that's just a way of education for you guys, trying to make it clear. So let's now look at the week ahead. Here we go. I'll just grab this week, apply settings, and I'll just pull across a calendar for us. Okay, so week ahead. There's nothing really majorly out for this afternoon. Again, what I'm looking at is risk. Looking for that risk sentiment, and I was shorting gold this morning because of this risk tone that has moved to risk on. So in a risk on mode, we're expecting to see gold lose in value because, you know, gold's been seen as that typical safe haven. And if people are more inclined to take risk, then we're going to see pressure on gold. So I was shorting gold this morning just above the 1500 handle, trying to play down to the 1489 support level. And I'm just keeping a careful eye on risk to see, as long as that mode continues, then I'm happy to keep shorting gold. But if it changes, then I'll pull my orders very quickly. Okay, the Australian monetary policy meeting minutes. Now, okay, the RBA is at a really interesting point at the moment. Okay, there's been some stronger data out of Australia last month. Now, I'm just going to give you something, guys. Okay, now knowing all the central banks are is an important thing to have, and I've got an article here I've written over the weekend which lets you know what all the central banks are doing. Okay, now the Reserve Bank of Australia is at an interesting point because they've cut interest rates in their back-to-back meetings this year. Okay, but they have lowered their GDP growth forecast and inflation forecast, and they're assuming, the market's sort of assuming, rates will move in line with the market pricing to 0.75% by year end and 0.50% by the first half of 2020. However, the data has been quite robust for Australia recently, and Governor Lowe spoke about the economy being at a possible turning point. So I'm looking at the Australian dollar because I think the market is going to be moving on this. Now, this is a developing situation, and I'll show you the trade that I am in at the moment. Again, not trading advice, but just showing you the trade, because I'm expecting, you know, this trade to be supported on a divergence between the Reserve Bank of Australia and the Reserve Bank of New Zealand. Now, if you look at the Australian New Zealand dollar pair, you'll see that the Australian dollar has just been generally gaining in value against the New Zealand dollar. You can see here, okay, you can see this general gaining in value. We've gone above the 100 exponential moving average and the 200 exponential moving average, and I got in here about a 1.0480. You know, I got in a sort of about 10 days ago, roughly, whatever it is, and I'm, you know, looking for this divergence to play out. Now, the thinking is that the RBA is going to be less dovish than the RBNZ, and that the supportive data for the RBA has allowed me to keep those longs in place. And so I'm looking for, that could be fair value. 1.0700 could be a fair value place to take money off the table, or if not there, depending how it plays out, then another fair value target. Yeah, 1.0700. Could it even get to 1.100? Not sure about that, but 1.0700 certainly looks doable. So that's what I'm looking at the moment. And where's the calendar gone? Yeah. So I'll be looking for clues for the monetary policy meeting minutes. Okay, so that I'm going to be eyeing that carefully. And you have the New Zealand retail sales. Now, look, here's a good example. We see that retail sales, they're expected 0.1%. So here's an example. It was 0.7%. So a weak reading is expected this quarter. So if this was a better data point, that would be possible to sell the New Zealand dollar into the end of the week. But because retail sales is a minor data point, then you can't do it on that data point. But that's the sort of thing that you want to look for. You want to look for an outlook when it's bearish on the currency, and then you see some bad news coming out, you see the bad expectations, and then you can sell into the event. You can't do it with this one because the New Zealand retail sales is not a really big market move. It's not like the Bank of New Zealand are focusing on retail sales. Okay, but that's just what you got for Australia. You got a few minor data points out for Australia, but that's the big picture that I'm looking at there. So monetary policy meeting minutes, looking for any clues any subsequent clues. We know that Labour was an important marker for them, and if you look last week, I'll just show you here. Look on the wage prices out of Australia were good, 0.6%, and then we had employment data, excellent, 41.1k, and there was a good uptick in full-time employment, unemployment rate steady at 5.2%. So you see that picture's building for the RBA. So that's kind of what I'm looking at there for them. Now, Canadian dollar CPI data, going to be very interesting here. Now, if you look at the end of last week, right? At the end of last week, what we see, we had, where is it? The CAD data. Some CAD data came out that was pretty robust at the end of last week. Now, can I see it now? Let's have a look. Where was it? It's not the foreign securities. Yeah, that's it. It's the employment change. Employment was good at 73.37. Okay, you can see that was a really good employment figure for the Bank of Canada. So that was a strong reading. That supports growth, good employment. So going into the CPI data, okay, the Bank of Canada is at a really, really interesting point at the moment. They are one of the only major central banks to remain neutral. Almost every other major bank is on some kind of dovish turn. We had the Federal Reserve, they've had their dovish turn. Will it continue? We'll see. We've got the Bank of England, we've got the European Central Bank, we've got the Bank of Japan, Swiss National Bank, RBA, RBNZ. But the Canadian economy has been saying, okay, it's pretty robust, it's been holding up. Now, the thing that affects CAD, as I've said before, is oil, okay? So with oil prices having been pressured, I mean, I'm looking at crude now. Crude's up a little bit today because of the risk on tone. It's about 54.87. So what's the Bank of Canada going to do? Are they going to stay neutral, or are they going to start turning dovish? So this CPI data is going to be really key, okay? So if we get, like, you know, a really weak reading here, then I would expect the Canadian dollar to sell off quite quickly, quite rapidly, because then the CPI data is moving in line with what the market's kind of hunches that eventually the Bank of Canada is going to have to turn dovish, okay? So in this kind of scenario, you know, look at this event carefully on the Wednesday, because that's going to be closely eyed, and it's 0.1%. So if you get like a minus 0.1%, minus 0.2 or more, then we're going to see some, you know, some downticks in CAD. CAD's going to be sold off quite quickly. So that's the sort of event I'll be looking at that closely, and I'm looking potentially, you know, US dollar Canadian dollar pair could be good because the US dollar has been a little bit stronger as of late, okay? And just on the hunch that maybe the Fed won't be as dovish as people are thinking. So a US dollar Canadian dollar pairing makes sense to me for that CPI data. Otherwise, if that CAD data is weak, then look for something that's possibly stronger. So if we're in a risk-off sentiment, CAD yen would be not a bad pairing. Okay, so that's just something to be aware of. We've got the FOMC meeting minutes. You know, everyone's trying to work out what the Fed's next move. There's a Jackson Hole symposium that's going on, and the question about the Jackson Hole symposium is, what's the Federal Reserve going to do? Are they going to cut rates by 50 basis points? Are they going to cut rates by 25 basis points? Are they going to cut rates at all? So the Jackson Hole symposium will be used to try to gauge what the Fed's going to do come the next meeting on the 18th of September. So the US dollar is at a really interesting point. The US economy has been quite strong. So the data is really stronger than the Federal Reserve's outlook. So I'm personally, you know, thinking that there needs to be a bit of a shift on US dollar. And I'm thinking, okay, the market seems to be, you know, really pessimistic about the path of the Fed. So I wouldn't be surprised if there's a change. So look at the Jackson Hole symposium for any change of expectations for the Federal Reserve meeting on the 18th, because that will set the near-term direction of the dollar. And similarly with the minutes that are coming out here, traders will be eyeing those minutes to see, you know, to what extent was the FOMC dovish? What factors, did they mention any factors that would turn their minds? Have those factors changed? So just look, read a good analyst on the FOMC meeting minutes and then look at the path of the dollar afterwards, and you'll start to get clues as to what's happening. So just be aware of that risk on the Wednesday, August 21st. Thursday, obviously got the Australian dollar PMIs, nothing particularly market moving necessarily. And we've got Euro PMIs on the Thursday. Now, the Euro is at an interesting place at the moment. The ECB are being expected to be more kind of dovish and bearish at their next rate meeting. There was an ECB speaker, Ollie Rehn, who's been saying, it's better to do more than less when it comes to, rate cuts. There's talk of asset purchases increasing, tiered rate deposit system, ECB rates cut by 10 basis points. And so what the market's trying to gauge is, will the ECB have to be more bearish? Will they have to do 20 basis points? Now, the slowdown in the German manufacturing was the key kind of trigger for, the sell-off in the euro. People have been concerned about the euro, but as soon as the manufacturing in the Germany really hit, that sent shockwave through the market. Now, the reason Germany really hit the euro is because Germany is the largest contributor to overall GDP in Europe. So in other words, what's bad for Germany is bad for all of Europe, okay? And what's good for Germany is good for all of Europe. That has that much impact on the euro. So just to be aware of that dynamic going on. And the other thing is there was some negative German ZU data out last week, and that didn't move the market as much as I thought it would. So that's my only concern, is that market participants are obviously getting used to this weak German growth. So just to be aware of that. And obviously, if that is an uptick, if there's a strong uptick, that's likely for the euro to rise, but it's not going to change the overall outlook for the euro. So that could potentially be an opportunity to fade a strong move. So if you've got a good move here, 51, something like that, then I would expect that ultimately to be sold off just at better prices. So again, look at the euro coming out on Thursday, the 22nd of August, 8:30 a.m. British summer time, which will be 9:30 a.m. GMT time. Obviously got the retail sales out as well. We've spoken about that. And CAD again. So be aware of any trade that you get into on the CPI data on CAD. Just be aware of the core retail sales coming out on Friday as well. Again, look, the core retail sales, they were minus 0.3% prior, and then minus 0.1% expected now. Some quite weak data expected for the retail sales on the CAD. And we've got the Jackson Hole Symposium, day 2 there, and with day 1 is, I think it's the Jackson Hole Symposium. Have they got the day 2? Yeah, here it is, day 1. So we've got that starting August 22nd. Okay, so look at the Jackson Hole Symposium for risk on the US dollar. Okay, that is going to be a key event to be looking at. And here's an article from CNBC. So it's a sort of resource you can look at. Okay, and you can go to the full story, and you can do some reading and research to find out exactly what the market is expecting for that. But that's the big picture we've covered with the US dollar. Now let's see. And then you've got Jerome Powell speaking on 3 p.m. August 23rd. Again, that's risk for the dollar, particularly in the context of the Jackson Hole Symposium. So expect dollar risk on day 1, 2, and 3. Obviously, risk over the weekend. So be careful of holding any US dollar positions during that time. Okay, let's have a look. I'll just see if anything else for me to cover. Yeah, one thing I made a note of is how to handle current risk sentiment. Now, at the moment, in this kind of environment we're currently on risk on mode. Okay, so we've got the volatility index. I'm looking at it again. Let's just have a quick lesson. Okay. Okay. So here's the situation. We've got volatility index. It's down 5.36%. 17.48. Okay, good. Volatility index is down. Stocks look up. 500 up 1.44. S&P 500 futures 1.08. Sea of green. Okay, all the equities are green. Asia, Europe, US. Great. So that's risk on tone. We got yields up, and that's bond prices falling, yields up. Great. So we're on a risk on tone. Now, in this kind of environment, we're expecting to see yen, Swiss franc weakening. Okay, so we're always trying to play a weak currency with a strong currency. So the weak currency at the moment in this environment is yen, Swiss franc. But this is the but. This sentiment can change at any minute. So as I told you, I've entered a gold short. I'll just show you the trade that I'm in. Again, not trading advice. It's just showing you how to, how I'm going about this, so that you can see how I'm managing it. Okay, so I know in this environment. Okay, I came to my desk this morning and I know we're about 1.500 handle. I knew, okay, I sold at what did I sell it at 1.501? So I sold it just about here. Okay, and I knew, look, in this environment, then gold's going to lose value because it's risk on. So, gold has been bid up recently on all the risk off sentiment there's been. So now it comes to the market, sea of green. So I've just sold the market down. Now my target, not going for anything greedy, I'm just going for here, 1489. Okay, that's what I'm going for. I'm just going for here. Just nice and straightforward. It is a support level. I've got what else have I got? I've got a pivot. I've got a pivot point down here on the 50-minute chart. You see, just around there. So put that all together. I'm rejecting the 200 exponential moving average, and with risk being once I'm away from the desk, I'll just move it to break even because risk is just so sensitive at the moment. Because you could have one situation that changes this and risk goes. So how do you handle it? Well, you just keep a very close eye on the equity markets. So you just look at the volatility index, look at the S&P 500, look at the Dow, look at the Nikkei futures. What are they staying positive? Because remember, equity markets give the lead for FX markets. That's why FX traders are always looking at the equity markets, because they give a risk on lead. When investors are frightened, they move money out of equities, because equities are traditionally they're more risky. Okay, because you're investing in companies, and companies are tightly tied up to how the economy of a country is doing, etc., etc. Whereas bonds are much more secure. If you get a really good grade bond, AAA bond, your money is much safer. So what happens? Equity investors, when they're scared, rotate out of equities into bonds, right? So that's what I'm looking at. I'm just looking at the equity markets. If I see a sign of that, if I see either get a headline like, Brexit's definitely going to happen, there's going to be a sure no deal Brexit, or Donald Trump says I'm going to put 50% tariffs on China, he says something really provocative. Okay, all this risk sentiment is going to reverse. So you can be prepared two ways. One, be prepared to go the other way. Be prepared for yen strength, Swiss franc strength, gold strength. But in this current environment, just trying a very short-term play, trying to get down to that 1489. Don't know if it'll get there or not, but that's what my play is. Okay, when I go away from my desk, I've got to do something this afternoon, I'll just move it to break even, because I know sentiment is so risk averse. So I'm more confident that we'll return to a risk-off environment. Okay, this risk-on environment is much more nerve-wracking, because there's something. So that's how you handle it. Let the equity markets provide your your lead. And don't forget, US-China trade war is maintaining center stage at the moment. Okay, so I hope that that is helpful for you guys. Don't forget, you can use the question panel anytime that things aren't making sense. And I'm really, I really want to make that. I really want this to make sense for you guys. And then, and don't forget, we have these offers here at HYCM. If you deposit certain amounts into your account, you get 1 hour coaching sessions with myself, 2 hour coaching session for $10,000, and you get follow-up trading review, get VIP support, you get different things depending on how much money you deposit into your trading account. People who've done that find it very helpful. So if you're about to deposit money in your account, don't forget you've got this offer here, so just make support aware of it so that I can help you any way that I can. Okay, guys, tomorrow will be 1 o'clock, 2 o'clock. We'll be doing a workshop. We'll be looking through again some of these principles, trying to help you guys and guide you guys through the market. I hope you have a really good situation. The takeaway for today is, remember, risk sentiment is fragile and it can reverse on a 5p piece. In other words, it can change very, very quickly. I hope you guys have a good day, and I look forward to seeing some of you tomorrow. Take care now. Bye.